In today's video, let's explore the psychological aspect of trading because it's an aspect that makes all the difference. It's really important to cultivate the right mindset in order to become and to remain a successful trader. And in today's video, we'll do our best to help you get there or to stay there. Hi guys, Will here for WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. Anyway, let's get straight into today's video. Now, as mechanical traders, we are fortunate because mechanical trading is the only way that a human is able to trade without relying on things like emotion, best guesses, predictions, discretion, and so on. And here at WB Trading, we actually provide our clients with clear, concise, and actionable rules to follow day in and day out to actually ensure consistency of performance without relying on those aspects that hold so many traders back. But when it comes down to actually taking trades, whatever the strategy, whether you follow mechanical rules and have an edge over the market, or whether you're gambling and hoping for the best, there will only ever be 5 different types of trade that we will experience. Okay, a large win, a small win, a break-even trade, a small loss, or a large loss. Okay, but here's the thing that sets the winning traders aside from the losing traders, and really take this in because it is, well, it's critical. When trading with Edge, when trading a strategy that is statistically proven to work and comes with clear rules to follow, it is virtually impossible to actually suffer one of those huge losses. Now, sure, you might suffer, let's say, slippage on occasion or a gap in the market, but in almost all cases, we thankfully remove those huge losses entirely. They just cannot happen to us. But with Edge, we actually allow those huge account building wins to still take place. And by just removing those huge wins, that alone is enough to remain profitable and have an edge, because I cannot tell you how many times we've received emails and messages over the years from traders who will get in touch and tell us, guys, I didn't have a stop loss, or I have a huge stop loss that contains half of my account or more, and I'm currently underwater with price headed fast against me. What should I do? And equally, I can't tell you how many of these traders sadly never get back in touch ever again after their entire account is gone. But let's look deeper and discuss a certain statement that we've likely all heard. Let your winners run and cut your losses early. And let me cite Investopedia here, who say that while this advice is offered by many, it is followed by few. This is because it's more difficult than it may appear. Most traders tend to take gains off the table early out of fear, acting on emotion, whilst tending to hold on to larger losing positions in the hope that they will rebound. However, instead of letting profits run, some traders do prefer to place a profit target that will lock in a predetermined profit, and likewise, traders often use stop losses that automatically enable them to exit a trade if a decline of a certain specified amount occurs. And these few successful traders typically have gained this knowledge via education. Now, you'll have heard me highlight the word education there because proper education is the absolute key to success. God, it really is. It really, really is. I can't emphasize that enough. Why waste the time and lose the money to the market all for nothing when successful traders are out there who can literally simply hand over their years of experience, saving you that time wasted and money poured down the drain and into the hands of the person who owns the trading platform that you're using. Again, as highlighted by Investopedia, successful traders are highly knowledgeable due to having gotten education. And again, I can certainly stand by that because I've spent literally, tens of thousands of pounds over the years on education through coaching, mentoring, online courses, in-person masterminds, and so on and so forth. So I've certainly put my money where my mouth is there. Now, have you heard about the disposition effect? Again, using Investopedia as a reference here, they say that the disposition effect means a type of loss aversion whereby traders hang on to their losing trades for too long and sell their winners too early. And this psychological bias, where losses loom larger than gains, can be detrimental. Letting profits run and exiting losses at a predetermined price is the better and more rational strategy. And if you really strip back what they're actually saying there, they've pretty much said put rules in place to protect yourself, haven't they? Now, coming back to just hoping that a large loss will turn around, one thing is, God, it's for absolutely sure, we never ever teach our clients to rely on hope. As mechanical traders, hope does not play a part in what we do. We have strict, proven rules in place that tell us exactly which markets to trade and why, exactly where to enter and exit, and predetermined points within the market to do so, and so on. And I agree completely with Investopedia here. Letting profits run and exiting losses at predetermined points, it is hands down the better and more rational way to trade, really, above taking your profits early and letting losses run, because as we know all too well from the emails and the messages that we receive pretty much constantly, the latter can and often will almost definitely result in entire accounts being destroyed. And we're seeing that in crypto, aren't we, at the moment? You know, many people buying the market without any plan, without an edge, without managing risk, pretty much just gambling. And again, I say this all the time, but we all know what happens to gamblers, don't we? They lose a lot of money if they're lucky, or every single penny if they're unlucky. All of that money just flushed down the toilet for nothing in return but pain, frustration, and unfortunately embarrassment. So what I'm saying here is, don't be that trader who puts it all at risk, who puts all of their money, their whole trading account on the line without a plan, without an edge, without clear, proven rules in place to follow, because otherwise the risk that you're taking, it is monumental. If as high as 85% of traders lose money, and most traders use guesses, predictions, hope, best guesses, do the opposite of them. Get educated, trade well with edge, and you will be much more likely to join that top 15%. It only makes sense, doesn't it? So to conclude, trading psychology is without a doubt a key element of profitable trading, but equally, without an edge, psychology is, well, it's really irrelevant. You must, as Investopedia said, allow your wins to get to your predetermined target and your losses to be contained in a manageable, predetermined stop loss. And as mechanical traders, we have our rules to follow that allow for this, providing us with an edge and allowing us to steadily and surely build our accounts across the months and the years, keeping us within that top 15% of profitable traders. And if you would like to work with us, or you'd like to learn the rules behind the mechanical strategies that we trade, I've added a link for you in the description where you can either head over to our website, or you can even book in a call with me personally so that we can get you up and running together. Anyway, we hope that helps. Hopefully that's added value for you. We'll leave it there for today. And as always, trade with edge, with consistency, and we look forward to having you back here on the channel soon. Thanks, guys.